COVID is reemerging as hospitalizations jumped 9% last week and deaths jumped over 10% last week as well. So this jump in COVID cases is going to be a positive for some of the vaccine stocks in the market. Obviously not a positive for the world, not saying that. Definitely unfortunate, but this will be a major catalyst for some stocks throughout the market, and one of those stocks is NVAX. So they updated COVID vaccine for the recent variants. So NVAX said that its updated COVID-19 vaccine has arrived in the U.S. and is ready for distribution following FDA authorization and CDC recommendation. The XBB version of this vaccine is presently being reviewed by the U.S. FDA. So they're currently reviewing this vaccine. I think it likely gets approved. And I do believe that this gets approved because earlier Monday, the FDA authorized Moderna and Pfizer's updated COVID vaccine. So that could kind of signal that there are some other FDA approvals coming down the pipeline. So just to read this out here, so the FDA obviously gave the green light on Monday to COVID-19 vaccines for Moderna and Pfizer. Both vaccine manufacturers have said testing shows that their vaccines are affected against EG5, the current dominant strain in the United States. The advisory group is scheduled to meet to discuss COVID vaccines Tuesday, meaning the vaccines could become available within just a few days at certain pharmacies and doctor offices. Health officials are urging people to get vaccinated as shots are becoming available. They are they are kind of rolling out these vaccines in reaction to a jump in COVID-19 hospitalizations that we went over in the United States and growing concerns about the effects that a triple threat of RSV, COVID, and flu may fall this winter season. And then let's take a look at some short interest numbers for this stock. So short interest is extremely high in NVAX. We have almost half of the float sold short, which is an extremely high number. And we have 2 days to cover as well, which is a bit on the lower side. But it's worth noting here that Fintel, which grades out every single stock in the market and gives it a short squeeze rating, they have NVAX in the top 2% of stocks, with meaning just that this stock is very likely to have a short squeeze. So we're in the 2% percentile for this stock. And then we can also see that the borrow fee rates are at about 10% right now. Basically, this borrow fee rate tells you what an investor is willing to lend out its shares for, right? So they get 10% annualized fee for lending out their shares to short sellers. So doing so here is definitely advantageous for those people lending out their shares, but it's more expensive for those short sellers, right? And given that the average short borrow fee rate is anywhere from 0.3 to 3%, that definitely signals that it's pretty expensive to short this stock right now. So that's obviously a reason that shares could likely move higher from a short squeeze is because it's very expensive to short the stock, which is a good thing from a short squeeze potential perspective. And then with that being said, let's take a look at some failure to deliver numbers. For those that don't know, failing to deliver is basically when a short seller borrows a stock from an investor and doesn't actually give that back. They fail to deliver. So we can see here that failing to deliver numbers are up over the past couple months, right? So when we take a look into 2020, 2021, and 2022, the highest numbers we're seeing is 30 to 60,000. But when we take a look at the average failures in August, right, we have 158,000 shares failing to deliver. In June, same thing. May, higher number. April higher number, March higher number as well. So this tells me that we're seeing this failure to deliver number be somewhat elevated for this stock, which definitely signals to me that we could see somewhat of a short squeeze as short sellers actually deliver their shares. Basically, for those that don't know, if you don't really understand what this means, just know that in the next 60 days, short sellers have to buy 158,000 shares, or the SEC will come after them. So that is definitely a positive for the stock. And then with that being said, let's take a look at the company's valuation just really quickly, just to see how overvalued things are. So obviously the company isn't PE profitable. They don't have a PE because of that, but we do have price to sales ratio of 0.41, which is actually significantly above that 18 times price to sales ratio that NVAX has been trading at for the past 5 years on average. So from a price to sales standpoint, the company is trading at a discount relative to its own history. And then when we take a look at growth numbers, so revenue growth for the past 12 months has been 23%, which is well above the sector median, but we're still below NVAX's 5-year average of 570%. Obviously not a sustainable growth rate. And then for the next 12 months, we have a revenue growth rate of 4% projected. And then NVAX profitability metrics don't look great. So we have a gross profit margin of -8%. For those that don't know, gross profit just basically tells you what a company makes for what it sells. It's revenue minus cost of goods sold. So this -8% tells you that for everything that they sell, they're actually losing money, which is obviously pretty unfortunate. And then the company has $5.36 in cash per share. And when you bring that to the current price, it's actually about 68% of the market cap is in cash. So that definitely signals a pretty high floor for the company, and signals that the stock is trading at a pretty fair price relative to its cash position. So you're only really paying about $2 for the equity, right? The other part is just cash. So you're paying $2.51 for the equity, and then the rest of that price is really just cash. So I found that pretty interesting. I definitely think this company offers pretty good upside, and I was kind of shocked to see that it had so much cash on hand. But with that being said, let's take a look at some of the analyst ratings for this stock. So we can see here that there are 6 different Wall Street firms that are bullish on NVAX, and then there are 2 Wall Street firms that are bearish on NVAX. So what does this mean? This means that Wall Street is more bullish than they are bearish. So they're basically 6-2 in terms of bulls to bears, which is obviously a good thing that Wall Street is bullish on the stock. And then we can see here that H.C. Wainwright reiterated their buy rating earlier in August with a $35 price target. B. Riley Securities upgraded the stock from neutral to buy with a $15 price target as well earlier in August. So it's definitely good to see that Wall Street is becoming increasingly more bullish on NVAX. And then with that being said, let's take a look at the chart here and see if we can't give a logical price prediction based on technical analysis. Obviously, this is not financial advice. Do your own research in D&D. But we're coming down to test support at around $7.20, $7.10, you could call it, this kind of buying range. This is where shares had bottomed in mid-August. It's also where shares had bottomed in June. It's also where shares had bottomed in May. And it's also where shares had found some footing in early July as well. So major level of support at around $7. I believe this level holds if we come down to test it over the coming days. If we come down to test this level, I would really give it an A++ grade in terms of at least a quick trade. I think this $7 level is very, very likely to hold, and we could see a move higher over the coming weeks for NVAX. Obviously, I spoke about the stock and all that stuff, but I just want to talk about purely the chart right now. So I think it's likely that we could see a move back up to resistance at around $9.80, which is where shares topped out in September. It's also where shares had topped out in August, where shares had topped out in July as well, and it's where shares had topped out in May. So it's definitely a significant level of resistance for the stock at around $10. So I think we can move from 7 to 10 pretty quickly over the coming weeks for this stock. Obviously, there's a bunch of different drivers fundamentally for this stock that I think really could help, push shares higher. So definitely do like the chart right now. And then let's take a look at the company's seasonality trends and see which month the stock typically does well in, which month the stock typically does poorly in. So we see September is the third worst month in the stock's history, so I don't love that, but we are moving into a bullish seasonal month in October with shares rising about 1% on average, and then November we're down 1%, and then in December we're typically up around 3%. So on average, shares do decline in September. 27 years of data here, so I do think that is somewhat significant. Obviously, not the end-all, be-all. There's a lot of different, drivers kind of throwing around this stock, right? A whole lot of different news events that are kind of throwing around this stock at this point in time. So with all that being said, I do think NVAX is a very intriguing stock, especially given the rise in COVID cases. I do think this stock is worthy of some capital, and it looks like a great trade on the chart as well. So definitely do think NVAX has a pretty good couple months here, and I do think this is a good stock to hold, over the medium to long term, especially if you're looking to take advantage of this recent trend in COVID cases. So with all that being said, I hope you enjoyed the video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone, happy trading, happy investing.